content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by Draper Goren Blockchain, aka DGB, the presenter, or other associated parties for the content being provided. Please do your own due diligence and seek proper counsel.
Boom! Welcome to DGB show number 3. I'm still trying to figure out what the heck is up with Instagram being so inconsistent with streaming. Doesn't seem to be working at the moment, so it is what it is. But we are live on Twitter, YouTube, and LinkedIn. Instagram is a bit of a experiment anyway. What's up, David Rankin?
Good morning.
Good morning. Oh, wait. We were going to, along with the date today, January 16th, January 16th, Bitcoin block. What did you say?
Oh,
hold on. I'll refresh those.
I got it. We're at block 826,051.
All right. Bitcoin block 86,000. We're Ethereum block.
800.
Well, there's no commas in this. 1,902,000. No, actually 19,021,122. And Tezos block 4,935,703.
Yes, this is the one that's nicer to have smaller blocks, right?
Yes, you wait an hour for the block to finalize on Bitcoin, or sometimes more, sometimes less, but the number is smaller.
Every 10 minutes.
I wish it was every 10 minutes and consistent. I did a thing. Remember when Lunar Crush was doing the Nakamoto 1 drop on Stacks, and it was, I think Stacks actually changed the way their blocks work. They've upgraded and changed over time, but at the time, during the first drop of Nakamoto 1, Stacks finalized their blocks along with each Bitcoin block. And I remember sometimes you'd wait for 45 minutes on a transaction, sometimes you'd wait 2 hours on a transaction, sometimes it would be 10 minutes. And it was so inconsistent. And for someone who's impatient like me, it was driving me a little bit nuts. But welcome, everyone. If, like I said, if you're watching on LinkedIn or Twitter or YouTube or whatever, feel free to comment. I'd be down to even DM a person or two the link to come back here and potentially pitch us or talk to us what's going on. But feel free to throw comments, questions, things like that. This last week has been crazy. We had the Bitcoin ETF stuff, but before that, we had the hack of the SEC Twitter account and that whole drama. What do you think, David?
I don't know. I don't know what I'm allowed to say. But I mean, I don't know. It makes you really wonder, was it just a premature launch of a tweet, or was it an actual hack? I don't know. There's probably some more information out there. It was interesting to see the market's reaction. I personally like volatility.
But it is crazy. Well, here's the thing. I wonder. So I think it was a hack based on the fact that if you looked, the first day I was texting this with people, for the first glance, I was like, oh shit, a draft got sent out like a day early or something, right? Yo, welcome, Hat from Malibu. I'm not far from you. So, the first day, first glance, I was like, oh man, a draft got sent early because all the rumors were that the next day it was coming. But then I went on the Twitter account for the SEC and I clicked on like the media tab, on their page. And I looked at all the images they post when there's some kind of news announced. And it was not just different, but they're super inconsistent. Like they don't have a solid format, but there is everyone has some similarities. Like they use like the same logo in the same way, and this one didn't. So I think it was a hack. Like somebody that was sitting on it probably went, okay, I'm gonna make a real looking announcement. And
the 2FA, you gotta have 2FA on your.
Here's my question: is if a company that was going to announce something that could create billions of dollars worth of volume, billions worth of losses, or even just paper losses, right? Like if Elon Musk tweeting some weird, obvious joke of like, was it like Tesla to 69 or to 420 or something like that, can get fined millions of dollars or fined and in trouble for doing that. And companies can get fined and in trouble for having negligent like security practices, right? Is the SEC responsible? Like they kind of made it seem like it was Twitter's fault, like or X, whatever,
That's where we have a double standard, right?
Yeah, should they get in trouble because they are constantly telling everyone here is proper security practices, do 2FA and whatever, and on their own account they don't have 2FA.
Yeah.
I don't think like my personal feelings, if I want to be fair, right, is if that happened to a company, I wouldn't think the company should get in trouble unless somehow it turns out that the company like was in on it or something. But then that's fraud. That's not them getting hacked and something happening. So I don't think they should get in trouble. But if any company has ever gotten in trouble for having, not having 2FA because they should have and they got fined,
give the fine back, right?
Yeah. Plus, plus the thing is, if you read, I think one of the coolest things that happened, the next day when it was, here's the thing too, the news was actually coming out the next day. So that's an interesting.
Think about this. Think of it this way. We need the court case. So when it goes through court and all of a sudden now the government's not held liable because of a hacked tweet, now future companies would be able to reference that case and be like, look, the government wasn't liable for this because of a hack, therefore we shouldn't be either.
Yeah, I mean, it makes sense. Like it makes sense, but also what is wild about the whole thing is that this whole situation is market manipulation by them, right? Like there has been no reason for 10 years, right? That this didn't exist. Like they say that the SEC is not supposed to play favorites. It's not supposed to allow, one thing versus another and all that, right? So like that's part of their thing that they always say, but they didn't allow people to participate for 10 years. So because of them, they gave more power to like Coinbase. They gave more power to Grayscale, like for Grayscale to be able to do the GBTC. They gave more power to like Michael Saylor with what he does, because those products wouldn't have even existed if an ETF happened, right? So they manipulated the market themselves for 10 years.
Well, I mean, the thing is realistically, it's one. First of all, we can't fault the government. They're only made up of people, right? But then two, it's like there should be an equality for everybody type of thing. Like the biggest thing that frustrates me is there's things in DeFi right now that I would love to participate in, but because I have ethical character, I won't use a VPN that does geo blocking and if a site, there's so many really good technology sites coming out right now that are geo blocking U.S. citizens from utilizing them, even though there's great returns. And if you're in the U.S. citizen, you just simply don't have access to it. Why should an individual be prohibited?
I think, you're being very diplomatic and correct in saying, the government is made up of people, so they need to be educated. But the thing is, I think that a majority of the people who are making
they don't feel that way. They feel they're privileged.
I think the most aggressive people who are anti-crypto, maybe even people who are pro-crypto in an aggressive way, are not mostly doing it. And again, these are politicians, so what they say and what they do is can be measured based on politics versus anything else. But what I'm getting at, and I keep saying this, like, I don't think that Brad Sherman or Elizabeth Warren are so stupid that they just don't get it, and they they got the meme and went, okay, like this is dumb. They're not a random troll on the internet. They're on the Financial Services Committee in Congress. They understand this, and there are other factors at play that are influencing their stuff here, because I think that their general politics would be extremely pro crypto if they understood what it was.
Oh, yeah,
and I think they do. And that's my biggest problem with it all, right? The hypocrisy part of it all. And the thing is, I'm such an idealist, person that I don't really care that much about the ETF, other than the fact that if people want it, it should exist because it exists for gold and it exists for everything else. Why shouldn't it exist for this thing? I'm not sure it's what's best for the freedom part of crypto, because it gives more power to those banks and those institutions we're trying to replace, those bureaucracies we want to replace, right?
So there's an issue out there.
I might be wrong.
Well, and I think what happens is I think that the Bitcoin ETF and these ETFs are going to allow the financial institutions to capture crypto and control it to some extent. I think there's an issue out there, and I was talking to a fellow friend who has an economics background and is an early Bitcoiner, and I was bringing up there's Executive Order 6102, which allowed for the capturing of gold, right? Back when that was established, people had to turn their gold back into the banks, right?
Yeah.
Because of that, we've had legal. We likely won't see another Executive Order 6102. And I tweeted this out, and I said, due to legal hurdles, but it's likely that somebody like Senator Warren will have another workaround, intentionally turning citizens holding their crypto in self-custody into felons, thus eliminating the competing voter base, right?
I don't think they can do that. Here's my reason why. I guess, okay, there is, you know what, I think there's a slippery slope there, kind of like, and I don't like those slippery slope arguments, because it's like, it starts with Elizabeth Warren tweets stupid shit to, jackbooted thugs are going to knock down your door, and take us at gunpoint. Like, it can go, it goes too far. But there is something to that now that you're saying it, because they can say, hey, yeah, you know what? Coinbase is okay. Oh, you know what? I still have that ticker down at the bottom.
Real quick. We have Hap saying, comment in here. And the argument against crypto is that it devalues USD. And I think obviously Brad Sherman needs to be educated on currency debasement and what happens with inflation. When you inflate the currency, you debase the currency. I actually see that the dollar is actually, Bitcoin is a great supplement to the dollar because it helps absorb some of that currency inflation, in my opinion. And that's why we see the price go up over time. I think Brad Sherman needs to understand currency debasement a little bit more.
I think here's the thing. There's a lot of things that can devalue the dollar. If, for example, Bitcoin actually became a global currency, maybe it would take some of the dollar's value away. But the government approves and agrees on things every single day that devalue the dollar in a very, very meaningful way.
Yes.
And those things don't provide any kind of freedom or assurance or value to the average citizen, and a lot of citizens would vote against it, right? But here's the thing that's interesting. I don't know if I've said this a few times, but I would love to get the updated numbers, because every day that goes by, and especially through the ETFs exposure, this is going to change. But over 60% of the people who voted for Joe Biden to be president own crypto now. So I don't think politically they can keep this up. It's a little bit of a, last cry of, before something, but it doesn't, that's what I'm saying. I don't think Brad Sherman is an idiot, right?
No, I don't think so
I think
either.
he's a politician. I'm being nice, but I think he's a liar, right? I agree with I would side with 90% of his politics. He's not in my district. He's in a district or two over from me. But I've seen him my whole life, and most of the time, I think he's
well. I think
a politician.
The sad part is I don't think anybody.
I like, he's a good dude. I think for the most part, but I think that there's other things at play here. And then when you follow the money and the numbers, then you go, oh crap, his biggest donors come from the major financial institutions. But those major financial institutions now are taking advantage. So I think all of a sudden things will shift and change. And we still need to book. We're going to book a law enforcement agent or two. Like thinking like FBI or somebody like that to come onto the show to talk to us about their feelings about it. Because every time they've ever talked to us that I've seen, they like it better. So all the arguments they have, on that front are not real either.
There's a generation out there that doesn't necessarily want to acknowledge currency debasement because it's pushed all assets up, right? And the thing is if we go and change that system, we will literally see the collapse of asset prices, right? And I posted another comment that said inflationary pressure in our economic system can disadvantage new market entrances, right? Currency debasement over time boosts early players with lower overhead costs, thus creating barriers to competition. Balancing policies are crucial for fostering fair business landscapes. The problem is, let's say I'm a contractor. I come from the construction background. And if I'm a contractor and I own my own building, right? And over time, because of inflation, my overhead cost goes down because I fixed my cost in time. Well, the new contractor coming in, who has to lease out a building, who doesn't have the ability to own a building, can't compete against the contractor who's been in business that owns a building because he has cheaper overhead. And so it drives out new competition in the marketplace. And we have a fundamental problem with our money, and it's benefited those who have held assets over the last few decades.
Anybody who's in the position like most people our age, definitely for me and younger, let's say you've been saving like I had been and I have been for many years to buy a new house or, buy a house, your first house, whatever. The cash you keep in your bank, it keeps being worth less and less and less. And every time you go and look at houses, even in this market, somehow the prices aren't really going down. And that's across the country, and it's going to keep happening. And that's how the average person sees it, right? And then it goes to small businesses. Then it goes to, people who want to compete with the large businesses. And it's just harder and harder. That's definitely a big part of it. But I think that, the currency argument could be an argument, but that would mean that Sherman and Warren believe that this actually could become like a global currency. Like the US's power is not exactly in the dollar, but in the interests and the military, the oil, the things that back, the stuff that back the dollar, right? They still have all of those interests, and we still have all of that power if there was a different currency, but you don't have the manipulation ability of the dollar and the ability to print the dollar and stuff like that. And
so hear me out, right? So right now we have the BRICS, right? These other countries going to the BRICS, potentially, they're going to barter amongst themselves. I wouldn't be surprised if eventually gets backed by gold. But the thing is, the U.S. is going to have to change up its system if we, and I know, and this is a long process, right? This is not this tomorrow. This is probably a 10, 20-year process. The thing is I was going back to that executive order and seizing how they seize gold, right? What if Bitcoin does become a reserve? There's a good chance that they don't want the American people holding it, just like they didn't want the American people holding gold, and that they might use a way to recapture that. The ETFs would be the greatest plan. If we have now a Bitcoin ETF, Warren could go, well, look, now there's no reason for you to self-custody because you can buy an ETF. And then all of a sudden they pass a law that says self-custody is illegal. Now you can no longer hold your property, and everybody has to buy an ETF instead. And all of a sudden, now we have the capture of all property. When people start realizing the digitization of owning assets, and that you own a stock in the street name, where you don't actually own the physical shares anymore, but it's the brokerage that owns possessions of it, and you're a beneficiary. Like, you truly own nothing and will be happy is the expression.
Yeah,
right?
yeah.
And that's what I'm afraid of. I believe in ownership, and this is why I like the blockchain, because I can actually custody my Bitcoin.
I'm with you. I tend to not go down the rabbit hole of they're going to take things away and they're going to do that, but I wouldn't be surprised, and there's could be some version of that, or they just make it way, way harder, right, to do that kind of thing, or they penalize people who don't, because it is way harder to track and trace your own transactions or your own stuff for your taxes, for example, if you do self-custody. There's tools, good ones that exist to do that kind of thing, and accountants know how to do it nowadays, but maybe they'll just really push harder against people who don't do it properly or things like that. Like they'll do it in like a shadowy way versus straight up making it illegal, but maybe they will, because at the end of the day, that would be the way that they keep money and power into the banking system and into the banks and the institutions that get their approvals and get their licenses and things. But there's Hap is talking about the 2 billion unbanked people globally, 2 billion adults. That's globally. In the United States, it's much less. But in the United States, the big problem is that anyone technically can get a bank account, but when you have very little money, the banks charge you more fees, and then banks don't even want clients that hold less than $50, $100 or whatever it is. And all of a sudden, there's this really screwed up system, right? And self-custody is practically free, right? You might want to buy a hardware wallet and things like that, but you buy a hardware wallet, for example, or you use your phone that everyone has, but let's say you use a hardware wallet, that hardware wallet is less than one wire transfer fee that a bank is charging you, right? Or
maybe $100 on a hardware wallet.
On a good hardware wallet, whatever. But it's getting cheaper, right? You're seeing people in other countries getting them for practically free compared to the United States. But anyway, where I'm just getting at is it's an interesting way of thinking, but it's just the thing that drives me nuts, right, is I believe in community collective stuff, right? I believe in the idea of the unions that exist and the benefits and the great things that can come of it. But we're in a world of bureaucracies where those things aren't pure, and there's people who are taking advantage. And it's not, everyone goes, oh well, it's capitalism, right? But it's not capitalism when it's fraud and when it's deception and when it's when there's secret things happening behind closed doors. That's corruption. That's not capitalism. But where I'm just really quickly going at is, if you ask any congressperson, there's probably only one person who believes in unions that's in Congress more than Elizabeth Warren, and that's Bernie Sanders, right? And Elizabeth Warren should be one of the top, I bet you she's one of the top spokespeople for unionizing and all of these things. And there's no more pure democracy or no more pure union tools than the DAOs that live on Ethereum, or the potential that it has, right?
I'm not a fan of DAOs though myself.
But you don't have to be. But if you believe in unions and you do not like corruption, then there are technologies that exist today that could completely make it so that every union member that pays their dues can literally see where every single cent that they put into the union goes, and they can know if there's corruption, they can know if there's backroom deals, and they can know. And all of a sudden, imagine how much more money could stay in the pockets of teachers and firefighters, like people who are literally right. So but where I'm going at is, she could go a complete 180 the other direction and be like, this is the greatest tool to happen because I can get paid in Congress and you, the taxpayer, can see where the money goes.
I don't think they really want that, though.
Of course they don't want that. Of course they don't want that.
That's the problem.
But if they believed in the things they said out loud, if they believed in the things they're selling us, then they would believe in this. That's the part that drives me absolutely freaking bonkers. Because, you know, if I truly believe that if we could follow our tax money, or if you were in a union, you could follow the union money, all of a sudden your benefits would go up significantly, or you'd have to pay in a lot less. Or maybe I'm wrong. Maybe it becomes transparent and they stop printing money and we really can't afford everything that I think we should be able to afford, but I don't think that's going to happen.
Or you see where the campaign donations go to, you know?
I would love to see where the campaign donations go to. I'd love to see where the taxes go to. And you know what? You know, if people choose not to vote and participate, that'll be on them, but they would actually be able to see where everything goes and what they can do. And all of a sudden, I have a feeling that the things that I believe we should all have, you know, like basic health care for the amount of taxes we pay for everyone, not just the people who are paying the taxes, I think that would be easy and cheap compared to all of the waste that happens now. And whether you believe it or not, maybe you don't believe in that. If you don't believe in that, you could vote to not have that. And all of a sudden, that extra money would not have to be paid in taxes, and we could choose.
So here's a novel idea that I could probably buy onto, is a government blockchain where the transaction fees are your taxes. And there's no other tax other than the transaction fee of transacting on the government blockchain.
But what do I do on the government blockchain?
The same thing we do on the blockchain now. The only difference is your gas goes towards the tax.
Oh, so you're saying a blockchain that exists, all of the taxes and all the transaction fees go to the government, and that would be our new union.
That's a new union, the revenue for the new system.
Well, I think, you know, I joke about this. But, okay, here's the thing. I paid my car insurance this recently, this week or a couple weeks ago, whatever it was, and I've never met a rep from my car insurance company. I have an insurance guy that was like my brother's friend or something, so he just does all our insurance forever. But I don't think if I started today, it's all new insurance stuff, I would just go online, search car insurance, search earthquake, whatever the insurances I need to have. I would search them, I would get them. I would never talk to a human. It's all digital, it's all online. In my mind, it's all digital and it's all online, right? I never have to actually speak to a human to have any of this unless there's a problem or something, right? It's digital. That's my insurance. What is insurance? Or what is the benefits a government gives their citizens? You know, it's insurance, right? Or at least that's what we want it to be, right? We have certain rights and certain things. We pay our taxes, we get something back. And there's a company or there's a organization, the government, that does those things. And then there's different levels of it. There's the local ones in our city, county, state, federal, right? What's stopping that insurance company that's currently digital to be a lot more lean and transparent and open, and then starting to provide more services? And all of a sudden, what if I'm paying into my health insurance online, and there's a global health insurance that's transparent and open and competes with our current health insurance system and whatever? And then what if they add other kinds of insurances, other kinds of things? What if they have such a big surplus, they could provide insurance to people who can't afford them, right? Like when they go to their hospitals, or not, right? But what I'm saying is that all of a sudden, what you're proposing when you're doing insurance in the cloud, right, is a potential kind of new union, right? And I like this crazy idea of what if there was, you know, I live in the United States. I pay those taxes to get my roads and infrastructure, whatever. But I pay to this union for my kids' school, and I pay to this union for my health insurance because it's better than the United States. Because that's what people do if they send their kids to a private school. They're paying a private school. They're paying some other nonprofit that has bureaucracy and bullshit themselves to send their kids to that school because they like it better than the public option. But what I'm hoping for in a world like that is that people realize that we buy health insurance because we have no choice. right? It's kind of insane. We have no choice because what our government provides doesn't exist, right? Like it's mind blowing to me. I think it's insane that the government doesn't think about that as competition in a way, right? Because every dollar somebody spends on a private school or whatever should scare the government that they're not doing their job right for their citizens, right?
That's a good point. Good point.
Say every dollar we spend on health insurance to some private company to provide us health insurance means, in my opinion, that the government.
I don't know if I want the government to provide me the medical though.
I don't. Well, because they're inept.
They might force a vaccine or something like that.
I don't want to go down that rabbit hole, but but here's the thing: we are forced to use certain things because of where we choose to live, right? And sometimes it's not a choice. You know, most of the people that we know were born in this country with us or born in a nearby country, and this is the best they can have and do. And you know what? The US is better than 90% of the world or a big percentage of the world in many of these things, but we don't agree with it. And we think that they can do better. So we're proposing things that could be better, right? I mean, I don't know.
We were talking about disruptions, like on a mortgage, a typical mortgage, right?
Yeah. Let's talk about the mortgage idea that you were discussing with me, which is really, really interesting. You go. I was going to try to set the stage.
So typically on a mortgage, your interest is front loaded, right? And so bear with me because I'm actually going to bring up the amortization chart, right? And
you want to bring it on screen, or is there?
No, because it's on like another computer.
Okay, we can share this. I think we'll try to make it like an open source version of this doc to share at some point if anyone's interested.
Maybe we should clean it up. Yeah.
So
the idea though is, you know, if you take out a loan for $500,000 and you're paying 7% on that loan, right? Your effective interest that you're paying, like in the first few months, is almost like 87%. Like you know, you're out of your payment of a 3326, you're paying like 2,911 approximately towards the interest, right? And so the thing is most people are only keeping their house on average, they say about 7 years, right? So the banks are making a ton of money front loading this, and one of the things. There's and I forget the strategy, but there's basically a HELOC strategy where people buy down the principal on their mortgage to actually reduce actually what it does is it reduces the length. It literally cuts years off of your loan if you pay down the principal early. And so
so people are taking I understand. People are taking a home equity line of credit because even if the interest rate's a little bit higher, it's simple interest and it's not front loaded the way a mortgage does. So if they pay off their mortgage with the home equity line of credit, it actually cuts years off of their mortgage. They end up spending less money than if they had the lower interest rate 30-year loan. They might pay for 22 years or something versus 30, the same amount of money. And then it saves them hundreds of thousands of dollars in interest over that period of time, right? How much interest on your calculator there, that $500K loan at 7%, after 30 years, how much actually is paid?
On interest? Give me 1 second.
Or just total payments. So the house was $500,000, but how much do you end up paying?
Okay, so yeah. So right now, if you were to go buy a house, right, and it was $500,000 was the loan amount, right? By the time you originally, hold on, this is that plus that. I'm just looking at this real quick. I'm having some type of error. I'm having some type of error in my formula real quick. Okay, what did I do?
Okay, I can throw there's 500.
Okay, so on 500, I try to move something around. Okay, so with principal and interest over time, you're paying $1,197,546 on $500,000.
Say that again. The how many million?
$1,197,546 on a $500,000 house at 7%.
That's payments and interest. That's the $500K plus interest.
Yeah,
you're paying two. You're paying like 2.25 times the amount you actually got the house for over those 30 years. What you're saying is you can take there's people who take home equity lines of credit, they put it towards the principal of the house, and then it actually knocks a few years off of the thing and saves them hundreds of thousands of dollars in payments. So when we were talking about this, the reason this got interesting is because David proposed to me. He said, well, you've heard of Liquidity and these other products online. We don't want to endorse any single product. We're not involved with any of them, and we don't know the risks and all those things, DYOR. But there's a product called Liquidity. There's a bunch of other products that are out there. And what people are doing with them is they're taking their crypto or taking their Ethereum. And there's going to be there's a few people building it for Bitcoin, a few people building it for other chains and things too, where you lock up your Ethereum, and instead of paying interest like you would on any kind of other product where you borrow against your crypto, they don't charge you any interest. They just charge you a one-time 0.5% fee. So
plus liquidation fee. There's a liquidation fee on there too.
There's some basic fees, but they're, you can very easily account for them, and they're significantly less if you hold the loan for more than like a month. They're significantly less than what you would pay in interest anywhere else to borrow against your crypto or anything you own.
So let me break this down, okay?
Yeah.
So it's interesting. Okay, so we already talked about how it costs you like over $1.1 million in principal and interest, right? Over the life of the loan. This is over a 30-year loan, right?
Yeah.
If I were to put $100,000 down payment, if I were to reduce my loan by the full $100,000, right?
Yeah.
When I took out a $400,000 mortgage instead, my payment would be $958,035. Okay, at the end. Now here's the kicker, right? Is if I instead take the $500,000 loan and in the first 6 months pay $100,000 on the principal instead, right?
Yeah.
My adjusted principal and interest after the end of the term is only $802,000.
Oh, so what you're saying is you take the strategy is to take the loan, not put as much down, take your cash or what you borrow to pay the loan down, and you'll end up literally saving, it sounds like about $300,000. So $100,000 paid off on your loan will actually save you like $300,000
off the principal, right? And not only that, but I'm paying the mortgage off in 23.3 years. In 23 years.
So what it does is you're actually reducing the length of the loan, and so then the length of how much interest is charged you and all those kind of things.
Correct. So it only works if you maintain the loan long term. So it doesn't obviously work for everybody. Well, if you find that dream house, this is a way to house hack your house.
Also, if you plan on, let's say you have crypto, like some of us true believers, and you think of them as a savings account. You don't care about Ethereum and Bitcoin going up and down over the next 5-10 years. It's your savings account. It's long. You're not buying and selling it. You're not trading. So the idea is, what I'm thinking of, and part of why we're saying this out loud is, one, it's an interesting and crazy and cool idea that people are doing right now and literally doing kind of like DIY. And I think that if a mortgage company tried to build these products into what they're doing, I don't think they'd be compliant at all. There'd be all sorts of red tape, a huge pain in the butt. But saying that, I want to say this, one, because it's an interesting thing that people are doing with their crypto that everyone should kind of explore and come up with ideas for. And two, I want this to kind of inspire people, because I love if somebody came to me and said, hey, there is a way to do it transparent or in a compliant way, I think we should do it. I want you to come to me and pitch me that idea, because I love it. And that's what I'm saying. But where I'm getting at too is, think about this. There are, let's say you have, you buy a house, but you also have crypto in a savings account. What if you could just lock up that crypto, because you plan on keeping it for the next 10 years, in a very as safe as possible way, just borrow like a small amount against it. So there's no amount you're going to get liquidated, whatever. You
also have a term. In a lot of these, you have a thing called a redemption. And so if the underlying tokens start to fall below value, what they can do is they actually do redemptions on the most riskiest troves, what they call them. And so what ends up happening, it essentially pays down the debt. So if
Yeah,
you're
it sells a little bit. It might sell a little bit of your Bitcoin to pay down the debt.
or in
which
this
means-
case, it's ETH, but yeah.
And then that way you would then end up owing, like in your scenario, you borrowed 100K. So let's say Ethereum's price went down below a certain amount, it would actually sell some of your Ethereum.
Well, that's a liquidation. That can be a liquidation. So what I'm talking about is so for in my model here, right? It's a liquidity loan of 100,000, and let's say you put in 100 ETH, and the loan fees would be 500. You're basically $700 on the loan fees on that is what it's going to be about. And the thing is if this would be over collateralized by 249%, right? The liquidation price would be 1,100 on the ETH approximately. But the issue is if the underlying stablecoin of the platform depegs and goes below $1, people can go. So let's say all the other troves were 300%, and mine was 249. Then what they could do is somebody could essentially redeem the token, the stable coin. And what would it do? It was essentially pay down my loan, and they would pay down my $100,000 loan. And in exchange, they're basically buying my ETH as they pay down the loan
at market price of that.
At market price. So
in worst case scenario, if you let it get if your loan to value ratio is kind of high compared to others, you could lose some of your ETH there, but it's also paying off your loan at the same time, that same dollar amount.
Correct. So at the fair market value. Yeah.
So you're losing the long-term value of that ETH, but if you keep the dashboard in mind.
But if you were able to buy a house like this, it may not be bad to have sold.
It's not bad. It's not bad. You're saving money no matter what. But where my mind is going is that I think this exists now. And the reason they're able to do that and they're able to create these kind of products is the efficiencies of smart contracts, not having to pay not having to pay for the buildings the banks are in, all the employees, all the things. It's all automated, and it's simple, right? And that's how they're able to do it.
This is where I think immutability is important, right? Because you were talking DAOs earlier. If there's a DAO, it can be captured potentially. With enough money, the banking system can potentially capture a DAO and either shut down a protocol or stop it. This protocol is immutable. And that's why I look for mutable protocols, because it means it can't be shut down. And not only that, like there's applications like Docker that allow you to run virtual instances, and you can spin up your own front end to interact with it. So, even if it got down, you can pay off your loans.
That's kind of the argument against things like Uniswap or Ethereum in general, right? All of these products that are built on chain, even if Amazon was no longer allowed to host front-end interfaces for them because the government or some person decides that it's not allowed anymore, you can run it at home. You could run it in a million different websites and access that same chain that can't be taken down. And that's what David is saying with what's going on. But my feelings are that this product exists now. Here is one example of David gaming that system to, not gaming that system, but utilizing your assets in a way that wealthy people already do with.
I have not done this. Full disclosure, I have not done this yet.
Yeah. But this is theoretical, but it can be done in practice. And there are people that I know that have purchased things by borrowing against their Ethereum using this exact product. But I haven't used it either. And you have to have a lot, right? I think it's better for what David's saying than somebody who's like, I'm going to buy a house this way. Let's say you need $500,000 to buy a house. You would have to have $5 million worth of crypto, in my opinion, to do that responsibly, right? We don't have that, right? We're not like the average person doesn't have that. We don't have that. It doesn't.
But if Bitcoin gets to $1 million someday,
okay, well, that's a different.
That's a different.
But I'm talking about the average person who's in the same position that most of us are in when we're 40 years old, we want to buy a house, or 35 years old, 30 years old, you want to buy a house, and the goal lines keep getting pushed back, right? And it's hard, right? That person probably isn't going to have millions of dollars worth of crypto to borrow against, right? The house is the collateral. But if you can use things like this to bring down your payment or do certain things, that could be interesting. And where I'm getting at, it could be with a car too, it could be with anything. But where I'm getting at with this is that this isn't the only crypto product that's creating efficient markets and things. There's other ones, and there's products that are DeFi that won't include, that I wouldn't even classify as crypto, that are coming into fruition, with tokenizing real world assets and things like that, like your stock portfolio or your ownership of private companies, or maybe your ownership of your car or your house could participate in these super efficient markets that might bring you something. And where I want people to think about it is, David just showed us one way that the average person could potentially save money, right? Because you could save money if you have $100,000 to pay off a loan, or you could save money if you have $10K to pay off a loan, or whatever. But the next thing I just want to say is, what other things could you put side by side with something we all have to deal with, our rent or our mortgage, right? There could be other things where it's like, hey, I'm not going to lock up my Ethereum because I'm scared of that protocol or whatever, but maybe I want to use this other product, and instead of making the interest this way, I'm going to take that value and put it towards a loan in an automated way that makes my loan zero interest, right?
Well, there's also other things, like a loan is not a taxable event, right? And so for a lot of people who don't want to necessarily pay capital gains tax on a sale of their ETH, they may take a loan out against it too. So, I mean, there's other avenues, but not only, but I think it also provides a lot of potential for third world countries to have really cheap borrowing rates, right? Because, there's places over like Africa where they're charging you 16%. And all of a sudden now they can get access to a protocol that charges 0% interest and a 0.5% origination fee and liquidation fee. Like, that's huge. As more people globally come into this space. I mean, it is still so early in this space. It's amazing, right? Yeah. When you start looking at the numbers of people that are actually participating in some of these protocols, and you got like 5,000, maybe 10,000 people total, you're just like, and there's already millions of dollars in these things. You're just like, wow. Like,
yeah. Well, I think it's what's really cool about it too. We mentioned earlier with banks, right? In the United States and probably in other parts of the world too, there's a certain dollar amount where they don't even want customers that won't at least put in that dollar amount. And then if you have a low amount of money, they charge you fees and things like that, and they make it impossible. What's really special about these products and crypto in general, that everyone can participate. If $10,000 is meaningful to me, I can participate in that amount. If $5 is meaningful to me, I can participate in the same exact product. And as it is with banks and institutions, there's all sorts of products that most of us don't even know about because we're not at that private banking level that people are at. When I bought my condo as an example, and I've used this example before, I had a job where I worked at the company was owned by Amazon. And I got some Amazon stock working there. And I sold all my Amazon stock to put a down payment on our condo. And to me, it was the greatest thing in the world because I worked a job. I actually got stock in whatever in that company. And then I was able to sell it to buy this condo, right? But then every time I started a company, I was fundraising for that company. I started talking to accredited investors, people who are wealthy and can afford to make investment. All of them are like, why didn't you just call up Schwab and borrow against it? Why didn't you just put a lower down payment and pay the whatever? It's totally worth it. I grew up in the back of an auto parts shop. I don't know that you could borrow against stocks in your portfolio. I don't even, never use the word portfolio until that moment, right? Like, there's things that most of us don't know exist because nobody taught us they existed. We didn't learn about them in school. And if we did, it was some obscure basic way of here's how to balance a checkbook, right? Like, we didn't learn any of these things, and most people don't learn until they do it. But you also, if you don't have a family around you to tell you that these things exist or to do these things, they don't exist. So,
and you don't truly understand it until you actually have the ability to understand it. I mean, like there's, like even with a degree in economics and schooling, like, I mean, actually getting into Bitcoin was like so eye opening to like how the whole system worked and the inflation and currency debasement, because nobody really focuses on that aspect, right? And it's just like until you get to that point, you know, sometimes it's like reading a book. Sometimes you read a
Brian,
book.
by the way, I'm just Brian is doing something really cool. He has a cool product called Base that he's working on, and he's working on kind of Bitcoin checking accounts. And I'm butchering it by oversimplifying it.
Well, we need to bring him up.
We only got like 5 minutes before we have to end, but I would have sent him a link. We'll have Brian on in the next couple of weeks because I love what he's doing. And he's doing something cool. But here's the thing, what you're saying, you mentioned that, you said didn't have the ability to learn about this stuff. But that's the thing, is we didn't have the ability to learn about that stuff because that used to be a product that only rich people could afford or could know about because they had a private banker who would call them up and go, hey, did you know this product exists? Or they had parents or family members who could educate them on them, or coworkers that could educate them on it, but the average person doesn't and didn't, right? But now where I'm getting at is because everyone can participate, because Reddit exists and we have more information than any wealthy people used to have.
Yeah. Now it's about filtering. Now it's about filtering the information, about understanding if the person telling it to you is legitimate or not, and things like that. Yeah. But where I'm getting at is these products are more and more going to exist for everyone, right? And we all can participate, and everyone can do it in their own way, right? Because whether you can afford, your rent month to month, you do have decisions you make every single day. And you do, buy a TV or a phone or go to Vegas once a year, once every couple of years. You do spend money on having fun every once in a while, right? That amount of money, the amount we spend at Starbucks, is enough to get started and play around, and participate, and also enough to test so you can start trusting markets. Because, even though I've seen people do it and whatever, I still wouldn't trust some of these products yet. I still would want to participate. I might put $20 into one of these, test it out, pull it out 10 days later, make sure it works and whatever, look at the block explorer, understand what these things are and start to learn. But the beauty of it is that you can see where all the fees go. You can see who wins when you lose, who loses when you win. It's not there is no curtain that anyone is hiding behind, right? There isn't, a bank that, that has a long, rich history of taking advantage of regular people who are powering these things. It's all transparent. And that's, I think, the beauty of it all. I don't know. I interrupted at one point. You were going to say something else. I don't know. No, it's all good. It's all good.
We got 5 minutes. Is there any other thing we wanted to hit? I mean, we didn't totally hit everything. What I would say is, I'm
really I'm looking forward to seeing how we see further adoption with the Bitcoin ETFs. I will admit, just to support it, I bought a little bit. I did think it was amazing though that it's their spot, but the thing is it's hard to figure out the ratio on some of these because not all of them are exactly at the same price. I don't think all of them carry the same the number. Like I think Grayscale was in the 40s, and then BlackRock's was over in the 20s or something like that. So obviously they carry different ratios of in regards to how much Bitcoin they represent for the spot price that they're offering, that's there. So, which I think kind of adds to some confusion. I think I tweeted out, so what's the real Bitcoin price? But it's going to be interesting to see how that goes. And
it is really interesting. I saw that. I think it confuses a lot of people.
I think so.
It's always confusing, right? That's the problem with. I find once I got the surface level of the crypto space, I felt like it was significantly less confusing than looking at the stock market or looking at even like Robinhood, which oversimplifies it, right? Because it's really hard to understand what the hell is going on in those places. And then you see stuff once you start paying attention, because I never paid attention too close on the stock market in terms of like details behind the scenes. But there's, like things like Coinbase, when they did one of their quarters, they had like a top earnings that like all-time high of revenue that they brought into the company, but their stock price went down, right? And it was, and I didn't understand like why this doesn't seem to make sense to me. With crypto and blockchain, things like that, things tend to be a little more transparent and open. But here we go. There's 10, 11, 12 ETFs now. The way they price each one is different. Now everyone's going to look at that and be like, wait, am I getting a lower price on this one versus on that one? And I don't know.
Yeah.
How the heck that works.
Yeah. It's kind of hard to call it spot, right?
Yeah.
So I don't know. So I think that was an interesting thing. I'm a holder of GBDC, which I've held for a long time. And
wait, what happened with that now?
I think it turned into an ETF. I have to verify. I know there's been some selling pressure on it because it has a higher, management fee on there.
I think, and I think there was something also where the GBTC was like a stock that you could buy that held Bitcoin, and the value of the stock didn't always line up with the value of the Bitcoin it was holding. And so at different points in time, if you bought it, you actually got like a discount to the amount of Bitcoin that you bought. So it was almost like you're buying Bitcoin at a discount. But to do that, you had to hold it for a certain period of time or something like that to get a bigger discount.
I bought it at the discount.
So what people were saying is that because Bitcoin's price went down over time or whatever, this is the first time people were able to actually get their money out of it at the price of Bitcoin or at a profit than ever. And most people who buy in the stock market and stuff like that aren't super long the way maybe we are with Bitcoin. And so that was what happened, is that all of a sudden people for the first time could pull it out. But also, like David just said, every ETF also has different fees they charge. So when you buy Bitcoin on one or on the other, you have to understand that some might charge you a different management fee for different reasons. And I don't know if there's any difference to the end user or if it's not, like maybe there's better customer support on the one that charges more fees. So I don't know what even you would do with customer support on an ETF. I'm not sure. I don't understand. But that's something maybe we need to learn. Like maybe we can have somebody educate us on that and everyone else can listen in on that. But at the end of the day, I think people are leaving that one also because of the fees. So
there's been some outflows.
But okay, so we gotta get moving. What I do want to say is we will try. We didn't talk about it, which is kind of funny. It's kind of become a meme already because we're on number 3 and we did some test ones. We still don't have an official name for this other than the DGB show, which we will try and do soon. But subscribe everywhere so that you don't miss it, on my LinkedIn or just subscribe to DGB everywhere. Just or go to dgb.vc if you want to contact us, get involved. We'd love to hang out and connect, and send us ideas for shows. We're going to start having people on like Brian, who just commented before, and of course people in the DGB portfolio and our friends to educate us, and then you'll get to listen and ask questions too. So that's kind of the most fun part of it. And I appreciate everyone who's watching. There's been a bunch on here, so thanks everyone, and we'll see you next week. Any last words, Rankin?
No, we'll see you next week.
Sweet. Peace out.